Thank you, Mr. Tope.
Thank
So
you.
I'll leave the meeting now, sir, so that
All right, that's great, sir.
Thank you.
uh,
Thanks for your time.
Okay, so yesterday we looked at the idea of budget.
Mm-hmm.
We looked at the you already know the meaning of budget. We already looked at I think we did those ones in the class before yesterday. We
Yeah.
did the meaning of budget, the various stakeholders involved in budget preparation, the limitations when it comes to budgeting, and the various steps involved in a correct budget plan. We looked at all those ones in the class before yesterday's. And in yesterday's class, we looked at the practical life scenario of an organization that is trying to prepare its budget. And you, as the management accountant that has been tasked with the responsibility of fine tuning and preparing these budgets, we gathered yesterday that the budget is grouped into two or three parts. The first part is the capex, which is capital expenditure. We looked
Yeah.
at the which covers non-current assets, which can also be described as fixed assets. Are you getting me?
Yeah.
Then we also talked about OPEX. OPEX are operating expenses. These are expenses of year in, year out, year in, year out. I would have loved to share a document with you to show you an example of how these budgets are done. But
Yeah.
maybe when I have time
I even
tomorrow.
I even want to like make a suggestion, like if we can, like, all these we've been saying. I So if you can like have a document whereby I can work with, then send to you, like prepare the budget and forecast for the following year. Isn't it blah 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 blah? So you
I
understand?
would I would look into an
Like
example
a
and
practical
yes,
scenario where I can work with and send back to you to see if we are put on track.
yeah, I trust that you will be on track. I will look into that. Yeah,
Okay.
yeah. So we, I wanted to share. I would, if not for the volume of task I am trying to clear from my desk, I wanted to edit a document to remove some sensitive parts of the document away
Yeah,
from it, then share the document with you.
that's fine.
A similar situation that I have done before.
Okay.
Yeah, so a similar budget that I prepared before for an organization, I would have just shared with you, but I did not have time enough to go and remove some sensitive parts of it.
Okay.
So hopefully, I will do that before the end of the week, hopefully, and share with you. All right, so we looked at the various methods of preparing budget. At least we looked at two, where we looked at the zero-based budgeting that is starting from scratch, and then we looked at the
Continuous
um,
budget.
various budgets, which can be done with markup. You mark it up. All
Mm.
right. So and then we said that the budget is just a standardized cost. It's just a plan. It's just what they estimated that they want to spend. But eventually, when in the real life, when they start buying those things, when they start making those orders, things can change. Do you understand? For example, they budgeted a laptop to be 1 million naira, but because of volatility in the exchange rates, the exchange rates of dollar to naira jacked up, and we could no longer get a laptop for 1 million naira. But they had already budgeted for 4 laptops. They already authorized the vendor to supply 4 laptops. There is already a purchase order, a
Mhm.
purchase requisition for that laptop. Do you understand? Just
Yeah.
that the vendor has not delivered the laptop. So in that case, you cannot cancel the deal again. All you just have to do is to go ahead and pay with the new rate. Do you understand? So the budgeted amount is 1 million. The actual amount is now 1.45 million, which
Mm.
has given rise to a variance of 450,000.
Please, can you come again with the variance, please?
All right. So I said when they budgeted for a case of a company who wants to buy a laptop, when the
Yeah.
laptop was budgeted for, the budget for the laptop was 1 million naira per each per laptop. Do you
Mm-hmm.
understand? But
Yeah.
due to so immediately the budget was approved, the vendor was contacted, um, and then the purchase order was raised. Um, and it is, for example, organizations that run procure to pay. It's until they see the goods before they pay for these goods. So they give the order, the vendor authority to buy and to bring those items, authority to commit, and they bring those goods in. By the time they receive those laptops and they want to pay the vendor, they are paying the vendor 1.45. Why? Because they are supposed to pay equivalent of 1 million naira in dollars. But
Yeah.
now the price of dollar naira has gone up, so they
Mm-hmm.
have to match up more naira and pay. So which means in their budget, they have budgeted 1 million naira, but the actual is what? 1.45.
Okay. That's due to exchange rate fluctuation. So
Yeah, so exchange rate is just one of the many factors that can cause discrepancies in the actual amount and the budgeted amount.
okay.
Do you understand? There are many other
Yes.
factors that could cause that could cause discrepancies. Maybe inflation, maybe
Yeah.
wrong estimate at the time of budgeting, and
Yeah.
many other reasons like that, where you as a person, you go to the market, you go to the grocery store to buy things. You, as an accountant or as an economist, you would have a list of the things you want to buy and an estimated price in front of each of these items on that list. And then you get to the market. Some you will get them for the same amount you wrote down, some you get them for a lesser amount, and some you get them for an higher amount. Do you get what I'm saying? So the amount you
Yes, I
wrote
do.
down, the amount you wrote down, which formed your budget, is now in most cases different from the amount you bought those items. Do you understand? So if it is higher than the amount you bought those items, or it is lower than the amount you bought those items, then there is a variance already. Do you understand? So,
Yes, I do.
your company says they want to produce 10 tons or 10 tons of cement, or your company wants to produce 10 um 10 tons 1 million tons of fuel, 1 million liters of fuel. I get what I'm saying. Or you
Yeah.
budget that you are going to eat a plate of rice finish in a single sitting, but
Okay.
eventually you could not produce up to the quantity you said you would produce.
Okay.
Do you understand? Or you couldn't finish the plate that you said you finished, or you finished the plate and you collected more. That
Mm-hmm.
is an idea of variance. Variance occurs where the amount that is being budgeted is different from the actual cost. So the variance represents the difference between standard cost and the actual cost. Are you getting
Okay.
me? Factors
Yeah.
to be considered when analyzing variance. Number one, the cost and benefit of the analysis of the investigation. When you are analyzing for variance, what benefit do you want to achieve from there? Do you get? You look at it, then you look at the actual amount involved in the variance. How much is even?
Uh,
How much
hello.
is even the? Yeah,
Okay.
I'm with you. How much is even um the material, the difference, the variance now that we're looking at? Then the trend of this variance, is it something that happens occasionally, or it's something that happens all the time? So you establish a pattern to it, and then you look at if it is material. When you know the amount, you determine the materiality threshold. You now
Okay.
say, okay, is it material enough to cause I get what I'm saying now. We
Yeah.
raise a query for.
Yeah.
Mm-hmm. Then you look at the size and you look at the proportionate significance of the variance.
Ah. Hello.
Yeah, I'm with you. Can you hear me?
Ah, I can hear you. Hmm.
All right, don't be scared.
Please don't sleep.
Nah, nah, nah. All
Okay.
right, so variance can come in various methods. It can come in front of profits. Profit variance. Profit can vary. Do you understand?
Yeah.
Where you have an amount. So this represents the difference between actual profit and the budgeted profit. Operating profit may vary. Profit variance can be analyzed or in various methods. Number one, you the production cost, the cost of production that you have targeted to spend. If it is different from what you have actually spent, then your operating profit would suffer variance. Then selling and distribution too, or sales margin variance. You get what I'm saying? So
Yeah.
when you are looking at variance, you break it down into the various elements of the production. Number one, the materials that are produced. Is there any variance? Is there any variance? For material, you can consider variance from the price perspective. You can also consider variance from the usage perspective. We talked about food the other time. How much food can you budget yourself to finish? Yoruba will say, "Ojulo monje to you know,"
Mm-hmm.
right?
Yeah.
So, but in most cases, you will see the food, you eat half and you're tired,
Mm-hmm.
or you finish it and then you still go and ask more.
Yeah.
So, in that situation now, there is already a variance. Variance in the materials that you have planned to use, and various in the price of these materials. Then
Please, can
what
you
are the things
explain profit variance, please? I didn't
profit
get
variance?
that. Yeah.
Profit variance can arise from variances in production cost, can arise in variances in selling and distribution cost, can also arise in variances in sales margin.
Ah, but there's another sales margin variance, which talks about variance in material produced and prices of material, or are they different?
No, those ones are material variance, not profit variance.
Mm.
Do you understand? I'm saying that variance can occur in any part of the business. And I'm trying to point your attention to even in profit, there could be variance.
Okay.
Do you understand? Even in the profit, which means you have budgeted, you've estimated that you're going to get so profit this year.
Mm-hmm.
But at the
Oh,
end of the year, you didn't get the exact profit. You either got more than that or you got lower.
lower. Okay. So if it is lower, okay, okay. Yeah, I understand now. What if they made? What if they made a loss?
That's still a variance. In
Okay.
as much as it is not exactly the amount that you have budgeted for, it's still a variance. Then you will now analyze it and interpret and find out if it's actually a loss or a profit. Do you understand?
Yes, I do.
All right. So for material variance now, material variance can be measured using the price of those materials, the amount you wrote down in your pocket that you want to use to get it is now different from the amount you eventually got it. Do you understand?
Yeah.
Then usage, you budgeted that you need to use this amount in producing social material, but you found out that you could use lesser quantity in
Okay.
producing that material. So possible causes of material variances is maybe you are bought lower than you expected, or you are making a substitute. Maybe you are planning to the things you write down to go and get from the grocery store. You now go there, you realize that the price of um um I'm trying to pick an item that female uses very well.
Okay.
Oh, yeah, so the price of tilapia fish is has changed. You now want to buy something lower. Do you get what I'm saying? When
Yeah.
you buy it, there is already an established variance there. There's already an established variance in that. So the direct material usage variance is also known to be the standard quantity measurement specified for actual production and the actual quantity used. Do you
Okay.
understand?
No,
So,
please, can you re-explain that part, please?
all right. So I said direct material variance
Is it also factors? Okay, like various method in variance, right?
Yeah, I'm explaining the direct material price variance.
Okay. Hello.
I'm here.
Uh-huh.
So I said that direct material usage variance is also defined as the difference between standard quantity specified for actual production and the actual quantity used. I explained usage variance, where I said you use more
Uh-huh.
or less than the amount you plan to use.
Okay.
Do you understand?
Yeah.
Yeah, you used more or less than the amount you planned to use. That is the variance. So for usage variances, and so that is material variance. We've talked about that there can be variance in profit, which means the amount you estimate to make is different from the amount you actually made. There can be difference in materials.
Mhm.
So
Hello.
there can be variance in materials. There can also be variance in labor. So every aspect of the production cycle can
Okay.
be affected by variance.
Okay.
Do you understand? Every aspect of the production cycle, whether material, whether labor, whether utilities, they are all affected. They can suffer variance. All right. So labor variance. Now, what are the things that causes labor variance? Or better still, let me quickly tell you about labor variance. Labor variance is a situation where the the quantity of hours that has been expected to be used is further reduced.
Okay. Okay.
Do you get it? So labor variance now can be viewed from two or more perspectives. One is the labor rate variance. What is the rate that we plan to use and the rate we actually used? Let us address variance from the rate. You can also look at the variance from the efficiency variance, from the labor efficiency. How good are those people?
Okay. Which means the variance we are sorry, the labor variance we are considering here is the
Yes,
like the rate, the per hour work. Let's say they work a few some hours this year, we're expecting to work more than expected hours next year. Or is it in terms of, oh, okay, we have um this number of people will be employing for so kind of work, like to perform this labor function. Then this year, next year, we should be able to like have a lower say, are you trying, do you understand what I'm trying to say? Are we
I'm with you.
like am I are we seeing labor in human form or the work they do?
We can see labor variance from those two things. Number one,
Okay.
in the work they do, before you hire a labor person, somebody to do labor services for you, you already had an achievement in mind that you want to achieve. Right?
Yeah.
You already had a target. You already had what they want them to do in your mind. If they
Mhm.
do it and they do it well, and you come and you see the work, you'll be happy.
Yeah.
Do you understand? But in
Yes.
case where you already said stipulated in your plan that they're going to spend 10 hours, for example, and eventually they spend lesser than that, what will happen to you? You will still be happy.
Yeah.
And this time around, you will grab your wife, then you are going up straight to her.
Yeah. Hello.
I,
Ah, okay. Please don't sleep.
no, I'm here with you. All
Because
right,
the
so,
first class you slept off. I didn't say
hey,
anything.
yeah, Basimbo. So, That's the labor variance
Okay.
concerning. That's the labor variance. Then, when you have moved away from labor, because before you produce a material, you put in labor, you gather material, the raw materials, then there is also overhead. Overhead, there can be overhead variance. You have estimated the amount of overhead that you are going to use in the course of the job, and then did not use actually that amount. You either used more or less. That more or less becomes your variance.
Yeah.
Do you understand what I'm saying? So
Yeah.
that is the general overview to variances when it comes to management accounts. So
So
by the time you've prepared your budget, which
okay.
eventually forms your standard cost, and
Okay.
then during the year, the owners of those during the year, the owners of those budgeted amounts starts to make the transactions. They spend an amount that is different from the amount you have budgeted for, which has given rise to the presence of variance.
Okay.
So that is so variance can occur from every phase of the business, every phase of the business. All you just have to do is understand where are you coming from and where are you now. Then you'll be able to do your variance.
So
Understand? Yeah.
yes, I do. So in this
Go
kind of
ahead.
now, does that means each organization, because I still don't, okay, each organization they have their own template for like, oh, this is how the report should look like. So it means typically in a variance report, it's only explaining the difference between how it's budgeted and what we are actually spending, right?
Mm-hmm. Say
Hello.
that again. Say that again.
Okay, I said, how did I even put it there? I said,
Oh,
okay, uh, okay, I think, uh,
calm
okay,
down. Calm down.
yeah, I think basically what I was trying to factor out with the various variance reports, like does it necessarily like that means each organization will have their own template for variance reports, and that variance report will it just be explaining just the difference between what we've budgeted for and what we've actually spent, which means variance is working like it's a present something like a present report on what we've budgeted and what we have spent there, right? Am I right?
Yes, the present report comparing what you budgeted versus what you have spent.
So that is just the
Um,
only thing we'll be seeing in our variance reports.
yes, that's what you'll be seeing. But then the numbers, as good as they don't all the time speak for themselves. Do
Um,
you understand? You must understand the numbers. So when you have done your report and you're showing XYZ as variance, you'll be able to defend the reason why those variance came to there.
okay.
Do you understand? Because
Yeah.
at the top management level, you'll be telling them, oh, we budgeted to spend XYZ on material A, but we've actually spent BYD amount. Then the business will be asking you why. The business will be asking you why. And then you have to justify. You have to start explaining that, oh, this is the reason why there is variance. Maybe for example, the HR department wants they budgeted to spend 1 million naira on recruitment and all those things. But
Okay.
then they did not spend it. The management is asking you why. You can easily see that the HR department did not recruit anybody because nobody left.
Okay.
Do you understand?
Yeah.
So if they budgeted for recruitment before, then so that is that about the variances. So by our next class, let's call it a day there. By our next class, we will see practical examples as to variances, and then we'll look further into interpreting variances. Do we
Yes.
get it now?
Yes.
Yeah, so we'll look further into interpretation of variances. So when we can successfully identify variance. You now know how to identify a variance now. All
Yeah.
just now is when you've identified, what does it mean? That's what we'll be looking at in our next class.
Okay.
And from there, we proceed to other aspects of our syllabus. I
Okay.
hope you've been able to get some value tonight.
Yeah, sure, sure. Sure. I do.
All right.
Thank
Take care
you.
of yourself.
Yeah, also
Uh,
be recording. Please, this net, the network we used tonight, please, let's be using it or teach of our
yeah,
class.
it is the same net. Let's stop the recording so that we don't locate the recording unnecessarily. You can end the call.
All right,
Let's
thank you.
end the call out of it, then we can talk later.
All right, thank
Thank
you.
you very much.
Tomorrow, right? Tomorrow is our next class, right?
Yep, tomorrow, yes. Pray for me that I finish my course sheet on time.
Amen. You finish on time. Thank you. Bye bye.
You're welcome.